As you said, we posted record results, and I'd like to point to the strength of the Santander network, which has been at the base of much of that increase. It's the highest result ever and highest profitability in a long time. As you said, the net interest income should continue to strengthen. That's the guidance we're giving for next year. You've only seen part of that, so you will see next year a much higher increase, especially in Europe. But overall, I'd say these are very balanced results. Top line growth, double-digit profit growth, CET1 and cost of risk exactly as we guided at the beginning of the year when things were very different. So we're very satisfied, we're very happy and proud of these results.
Anna, can I bring up the risks and the threats here? I mean, NPLs look so low relative to history, just slightly above that 3% mark. But in a rate hiking cycle, one does wonder what changes in a loan portfolio. Is this time any different because you've got more data to hand in terms of digital bank, or are there genuine risks out there that you're concerned about?
So this time is different on two fronts. One is for everybody, and the second is more specific for Santander. So this is a different, and again, we don't know, but we believe this will be a different kind of recession. In 9 out of 10 core markets, employment is at its highest level ever. And in countries like Spain and other European countries, the consumer has less debt than 10 years ago, for example. UK also. So that is really important. At the end, employment is the most important factor for credit in our case, credit performance. But second, very important, we were able, and this is what we're guiding for next year, is below 1.2. We were able at the beginning of this year to say we'll be below 1, and we are exactly below 1 this year. So, you know, we do have a lot of knowledge of our customers and portfolios, and the guidance we give at the group level has delivered once again in what has been a very different year than what we all expected 12 months ago.
Yeah, Anna, very good morning to you. And absolutely very conservative provisioning as well. But I did notice that actually you are, as you and Karen were referring to, loan loss provisions, you've put up 31% higher in constant euros. Just to be prudent as well, it's a big year for Spain as well. We've got a lot of elections, there's a lot of strikes going on, which we spoke to Pedro Sanchez about, Karen and I, quite recently as well. Could be a lot of upheaval, cost of living increases. Are you concerned that actually this is going to be a very volatile and tough year?
So again, we finished the year on target, but please remember that the numbers you're seeing are considering releases of provisions last year. So what you're seeing this year is partly because of last year. And also we have a macro overlay, i.e. we're anticipating, it's not a cost of risk, it's an expected cost based on macro that actually today is better. So you actually, if you look at like for like, the increase is significantly lower. But again, as we said this year, we did anticipate this normalization. So it is what we expected. And I think the key point is our revenues are growing faster than our cost and our provisions. We're delivering 18% net profit, 23% EPS growth. You know, these are very strong numbers in what has not been an easy year.
Yeah. And yet the ROTE is under a bit of pressure. I know you've got a 15% target as well, but 12.76 in the fourth quarter versus 13.38 in the fourth quarter as well. What made it just that little bit, what made it move in the wrong direction, shall I say, in the fourth quarter?
So banking is a seasonal business, believe it or not. And the fourth quarter, if you look at the fourth quarter on fourth quarter, actually, it's a better result here. And we always have, you know, third against fourth is always usually coming down. So the underlying trends are incredibly strong. You said at the beginning, you know, net interest margin is growing 25% in Spain. But I also would like to point to other, customer growth. We grew 7 million customers, which is a big part of the increase in revenues and profits. Is coming from more business because we're delivering a better service, because our customers are more satisfied. And we're working very hard on transforming the model. Very importantly, we're basing a lot of the growth also on the global businesses. Our corporate investment bank is up 30% year on year, when most of our peers are down. So there's many different factors that are driving revenue growth and profit growth, as well as interest rates. Clearly, they're going to be a tailwind, as I said, mostly in Europe.